Vinayak, thanks a lot for joining us today. Excited to chat with you. So talk to us. I'd love to start just with Warren Buffett. Talk to us about Warren Buffett. I know you are interested in a lot of his like methodologies, a lot of his investment principles. But just to start the conversation, tell us about how you got inspired by Buffett and kind of lead us into where you are today.
Got it. I mean, he's a true legend. I don't need to say that too often. And he's also a genuine human being who has inspired not only me, but many investors. And a crazy thought I had 12, 13 years ago was, can someone follow in his footsteps and do something that he has done? And I always believe that he's telling the truth for most part, right? I mean, there's some marketing that he needs to do, but I believe that what he's telling is learnable and doable for an ordinary human being who works hard. And so I started my journey 12 years ago, and I had a great moment in 2016 where I attended the Berkshire Hathaway meeting for the first time. And Mr. Buffett spoke about how the railroads had not done good for last 2 years, and they will do good this year because of this utilities not bringing in shipping of coal because they over-ordered the coal last 2 years. So that just got me thinking, okay, so what Buffett is essentially saying is a lot of utilities had oversupply of coal and they're not shipping coal for last 2, 3 years. So the coal companies also must be suffering. If railways are suffering, then can I look at publicly traded coal companies and figure out who are the biggest suppliers that go through these rail companies? And I was able to 5x my money in Cloud Peak Energy, which is now, I think, bankrupt or out of it in Montana. And I sent Mr. Buffett a letter thanking him. But before I did that, what I did was I called Goratz. I'm a big Buffett fan. I've read everything he has written. I've listened to every one of his interviews, sometimes many times. And all the books about him are written for him, right? And I called Goratz, asked for a T-bone steak, two mashed potatoes, and a cherry Coke, and a decent amount of tip. And I got the gift card, and I sent it my letter thanking him how he helped me essentially pay for my trip to Omaha that year. And the generous fellow that he is, he replied to me, thanking me and said he will enjoy the meal. I think that's one of my most prized possessions, something I guard very zealously. And that actually helped me, right? Because I could see the way he operates can be repeated. And in 2017, we launched our fund with with very good success for us and our partners.
That's amazing. That's a very cool connection with Warren Buffett. Obviously, that's near and dear to my heart as well, being from Omaha, Nebraska myself. Maybe step back a little bit to Vinayak and tell us about your kind of your personal journey getting up to the point of when you decided to get into investing. Kind of what was your thought process in your journey to that point?
Got it. I mean, growing up, economics or the way society works and businesses work always interested me as a child. But in India, you have only two routes. You can either become a doctor or an engineer. I took the engineering route, and when I came to the US, I got lucky to join McKinsey. And at McKinsey, I was advising CEOs and boards and senior executives on business decisions. And I really, really enjoyed it. I was there for many, many years, and that's when I thought, can I combine this love of businesses with investing and do something about it? So I took a 5 year journey of self evaluations from 2012 to 2017, where I read a lot. I augmented my skill set. So let's say I was good in understanding businesses, but I can be a financial sleuth. Can I understand and decode the financials and try to find the next Enron, right? And so I spent 5 years being very honest with myself and building that portfolio of my skill set before doing that. And if you remember, there is one interview by Warren Buffett for CBS Moneyline in 1991, where Adam Smith asks him, "Hey, Buffett, how can someone start what you're trying to do?" And he said, "Well, look at every company." And he falls off his chair. He said, you must be kidding. No, no, there's 7,000 publicly traded companies. And he said, no, start with the A's then, right? And that's what I did. I found 5,000 publicly traded companies that are worth looking at. And I looked at every single one of them over the next 5, 6 years till my eyes hurt. I had numbers in my dreams. But what that does tell you is you learn a lot, right? And I found some businesses, banks in 2008, 9, they didn't even flinch, right? During GFC. And there are certain banks that stayed steady. And I would not have learned or understood it, right? And so I think following him has helped me in many, many ways. So
That's very cool. So obviously, I guess your investment philosophy or methodology is obviously aligned with Warren Buffett, right, and value
right,
investing.
correct.
Uh, just curious, the current state, 2024, where we're at today, most people say that value investing is dead. it's very hard to make it work in the current economic environment and where we live today, right? So, what are your thoughts on that? Obviously, you have a different approach, which has worked for you.
Correct.
What would you say to those people?
I think the death of value investing has been greatly exaggerated. And when people say that, those are the ones who don't actually understand value investing. There's only one type of investing, and that's value investing. If you invest in NVIDIA or any other company, or the way I buy rail companies or chemical companies, it's all based on value, right? You're trying to put out capital now to get more capital in return later. Now, the question you ask yourself is, why am I doing it? Am I doing it because I'm doing right calculations and I believe in the future of something, or I'm buying something because everybody else is buying it and it's going up, right? And then what people use is this price to book or price to earnings, all of these ratios that Buffett and even Ben Graham have said many times are not right measures of value, but those are easy to measure. And so value investing gets criticized by people who don't understand value investing, and they put in a bucket where they put it, right? But to me, value investing is even better now because very few people want to do it. Everybody wants to do momentum. That means I see more value in than I can put my money on. Right now, my max number of positions I can have is 15, and I know 25 that will double in next 2 years. And it's frustrating because I don't want to hold more than 15, but I'm hoping this one doubles so I can sell and buy something else quickly because there's so many opportunities in non-tech that people just don't want to look at right now.
Yeah, it
So
definitely requires some emotional intelligence and restraint. When you see things happening and you say, I need to be
Correct.
very calm and calculated in how I approach this. There's a lot of noise out there, but let's stick to my focus, right?
yeah,
And I
so
think, go ahead, Mike.
uh, 15 positions. Talk to us about that.
Yes, correct. And so the way I buy positions is what I like, what I understand, right? I want to restrict myself to 15, right? If I do too many, that's not fair. That means I don't understand, right? People use this diversification, CYA often to say, oh, I have 30 or 50 positions, but then you don't like the 30th one as much as you like the first one. That's my belief. If you really like something, you should be able to put 10% of it, your and your kids' net worth and your wife's net worth in that position. Otherwise, you're not doing what you know, right? And that's my 2 cents on it. So I want to hold concentrated position, and that also challenges me to do my work and be concrete in what I'm doing, right?
Yeah, I suppose it might make it
And
easier to like stay on top of the companies too, being able to keep up with the news and whatnot.
true, but that's true. But I also tend to read a lot and spend a lot of my days and hours reading and understanding about different businesses I might not invest now, but because something might get interesting later, right? And many times it has happened that I follow a business for 6, 7 years, and then something interesting happens in that business, right? And so my process is actually flipped on its head, right? People, they'll go out and they have filters. Oh, what are the businesses that are trading at a discount to the value? Can I buy them now? Like, so that's how they approach. I flip it on its head. I study businesses. And if I like a business, I say, okay, this is a strong business, good moat, good return on capital, safe business. Okay, very expensive right now. Okay, I park it. I make a note of it. I put it in my watch list. And sometime 5 years from now, there's a CEO scandal, something goes wrong, and the stock trades at 80% discount. But then you've been following that for 5 years, right? And then it's very easy to pull the trigger on those. And almost all of my positions are that way, where I have known something, but it was just too expensive, and I just followed it for years and years and years before I did something about it.
Yeah, very interesting. I'm just curious. What are your thoughts about AI's impact in value investing and how you invest? I know you have some background, and when I say AI has been around a long time, but generative AI,
Right.
different use cases. I'm just curious from your perspective, what you think about that.
Right. So when I came to this country almost 20 years ago, this year, this August will be 20 years when I came to for my master's at Purdue. My thesis was in what I call topogeometric segmentation. And it's a fancy word of saying we had neural networks, AI, we used ML. It was basically a search engine for 3D parts. And we used a lot of these algorithms back then. It was not as sexy back then as it is today, right? But the new LLMs, the way they work is, if you think about the distribution curve, right? And if ChatGPT learns all these books, what it tries to focus on is the central theory, right? The first two sigmas or three sigmas is what it'll try to tell you. If you ask it a question about India, it'll try to read and figure out the first, within the central line, what are the first two sigmas. It doesn't go at the tail end. And where you make money in investing at the tail end, right? So ChatGPT is very good at rehashing what humanity has learned and the most likely outcome it will tell you. But that's not what investing works at, right? Investing works when you have a hypothesis that is a contrarian one and nobody agrees with you, right? And quoting the famous Howard Marks, you make money when two things are true. You have a hypothesis that nobody else believes in, and second is you are right, right? Those are very two hurdles to beat. And I think ChatGPT can tell me, okay, I want to understand railways. Tell me more about it. It's a great tool, and I do use it. But in terms of what railroad stocks to buy now, I don't think it's a good tool.
Yeah, I'm curious. Like from the analysis, you said you went through 5,000 companies. Do you feel like the analysis process is sped up if you use a kind of an AI framework, or
100%, right?
yeah,
So I advise a lot of students, and one of them he said to me recently, it took him 1 month to learn CSS and HTML coding language to build a web page, and it took him 2 hours to learn ChatGPT and do the same thing with ChatGPT. Right?
wow,
It's insane, right? So it does add a lot of value. You could ask pointed questions about inflation, connection between chemical companies and natural gas, and agriculture and chemical consumption. It's a beautiful tool, but if you use it, I think it will speed up the investing process. But like with any tool in that humanity has, you need to know how to use it for your advantage. So
yeah, you still need the human in the loop, right?
correct.
That's
I think you do, right? See, you mentioned emotions earlier, right, Skylar? And I think 80% of my job is understanding emotions, and it's 20% is math. Math is the easiest part. It's it's human emotions. Why do people like Nvidia at $2 trillion valuations? Why don't they like a Foot Locker at $14, right? And all of those questions I ask, and it's just human behavior, right? They overreact when they get enthusiastic, and they overreact when they get pessimistic. And then if you can hold your head steady, do the math right, and have the strong stomach to stay, you can make money.
So tell us about how do you go about identifying these companies? You mentioned you have like a watch list. What's
Correct.
your starting point? Is it, maybe you just see it on the news or something? How does it begin in your book?
Correct. So the way the process began for me is I'm just a curious person about businesses, right? So let's say I'm listening to CNBC, Bloomberg, I'm reading Barron's, or some of these old books. I try to find businesses and industries, right? And then say, okay, how is this connected to that, that connected to that? And sometimes I'll see an ad of something, and then that get me thinking, why is this business working or would work or not work, right? And you just connect the dots and you find something. I'll give you an example of a company, UNFI, right? um, United Natural Foods. What does it do? It delivers organic foods within US. Very low margin business, but you and I would not start that business because very low margin, very capital intensive. But would that go out of business? I would say unlikely, because there's a move towards organic foods. You're not going to have every grocery chain start its organic food business, delivery business, right? So you could buy that stock at $6 during COVID, went up to $40 recently, right? Right now it's again at 12 or 15. It could go lower again, and then I can have a second bite at the apple again, right? And so those sort of things happen because I believe in the organic food movement. I think humans need to eat healthy. And then I saw the truck outside of Whole Foods delivering the delivery. I said, "Oh, what does this company do?" And it happens that I find trucks on the street or banners, and I ask my son or my wife to take a picture, and I later analyze those. It might sound quirky, but many of my investments I found that way. They're multi-baggers for us. So
Very
it's
cool. Much different
yeah,
approach than the momentum we we see a lot of people take.
yeah, for sure. I know
okay,
you talked earlier, Vinayak, about kind of your upbringing. I find it fascinating. Everybody has a different story of how they get into the space. Some come from, they go to university, they go through the process. Obviously, you came to this country 20 years ago. Maybe talk a little bit about that, your background and upbringing, and how it kind of led you to where you're at. And obviously, what I hear from you is you're always curious and looking for opportunity. That comes in different shapes and forms for everybody individually, right? So that's definitely interesting to hear that.
I mean, I'm a very interesting story. That's what I feel, at least, and I'm a product of our society. Right? So a lot of people have helped me along the way, and I would take this opportunity to thank them as well for this journey. So My father was a forklift operator. My mom never went to school, but this work ethic of studying, going hungry to bed was okay, but not doing homework was not okay, and being ethical about it. Right? So the two things my parents really instilled early on was be hard work and being very ethical, right? So I wanted to come to US. I had heard great things in India, but I didn't have the money to apply to come here. I bugged about 100 plus professors, reading their papers and emailing them every night. Finally, I got a scholarship to Purdue, and then I applied. I got a verbal scholarship thing. If you apply, we'll give you the fully funding. I applied to only one university. The admission check at that time was $40. I distinctly remember. I was hard pressed to find that $40. Send that check, and I sent it in April, and the Purdue's application deadline is February. So my application went in April. I got my reply, and I couldn't show the money that I need to show for my student visa, but it was all taken care of because Purdue fully supported me, and I'm grateful for that. So when I came here, what comes naturally to me really helped me as well in my work transitioning to McKinsey, because I'm an engineer by training, right? So I'm a mechanical engineer, then went to CS. And so all of these different things at that point felt like a dog's breakfast, but they all fit nicely now because since I did mechanical engineering as an undergrad, I can understand John Deere, I can understand Manitowoc, and I can understand all these manufacturing supply chains much better. I also worked at Google after that, so I can understand software and that better as well. And so that all of those things are really, really helping me bring a different perspective than a typical tiger cub or someone who worked at Citadel who starts a hedge fund, right? So I'm an outsider. I don't know anybody at the industry who runs a hedge fund, and that really helps me. And my background makes me a contrarian, right? So if I have to sit in a room and read books for 2 months and everybody is thinking I'm crazy, I can live with that, right? Because as a child, the way I grew up and I had to study, people always looked down on me or would tease me for the way I behaved, and that was okay with me, right? So I developed a thick skin. I think that helps me right now to have a contrarian view and hold my positions for a longer time.
That's amazing. Yeah. Great story.
What do you find interesting right now in the market, in terms of maybe industries or different companies that you see out there?
Okay. Thank you for that question, Mike. And um I think I don't know what heaven looks like, but I think US capital markets are as close to heaven as you can get, right? Think about it, right? Someone could be living in the middle of nowhere, has an access to library, can read all the books for free, has access to CNBC for free, and can trade at cents on the dollar, right? The trading costs are very, very low. So anybody can beat the market if they want to look at it in a different perspective. So going back to what I can find interesting today is look at a company like Under Armour, right? It's something, and the analysts who cover Under Armour at big shops will say it's a great company, trading very cheaply, but we don't want it right now because it might go to five. But in 3 years, they will all agree it should trade at 2024, right? So what happened with Under Armour, right? During COVID, everybody wanted athleisure. Think Lululemon and Under Armour. They had to reorder so much of their apparel, right? But what was happening? The Los Angeles port was clogged. We had 80 plus ships parked. So they had to fly, pay two times, three times, four times the shipping costs. And they overordered the inventory. At McKinsey, I learned nobody in retail hates anything more than not having the right merchandise when someone walks into the store. That's absolute anathema, right? So what any retail manager over their sort will do, double, triple order, but they'll not have the shirt in inventory when a customer walks in. And now what happened was they overordered the inventory. They took on a lot of debt, so balance sheet looked bad. Inventory looks bloated. Now what's happening last 1.5 years? Inventories are going down, cash is flowing in, balance sheets is looking healthier and healthier and healthier. But now what Wall Street does not like is sales going down. Nvidia goes this way, sales goes this way, they'll pay any price, right? But if you look at 19, this was 20, and this is 24. See, but this graph is what they don't like. But if I look at this graph, it's amazing for Under Armour, right? So Under Armour is something I don't own. It's not in my fund, and I'll be fully transparent and share a position that I have no horse in the race today, at least as of recording. It might change tomorrow, but that's something anybody can understand. They use Under Armour clothing. They can go look at the store and see what's happening, and they can look at balance sheet, one of the most healthiest balance sheets in retail, right? So
I love that. That's a super contrarian pick. I don't hear anybody in the market talking about Under Armour. I love to see that.
Yeah, that's
Um,
amazing. That's pretty cool. Um, that's
But
great. Well, I guess go ahead.
sorry, and I just noticed I think you're wearing an Under Armour shirt too, Skylar. That's quite
Yes,
quite amazing.
it's all good. Yes, absolutely. We love Under Armour. Yeah, obviously, as you talked about your approach to investing, kind of this industries like maybe retail. Any other insights into the economic landscape as you kind of go through your process? Obviously, from year to year, you talk a little bit of kind of how you go about it, but any other aspects that you find interesting as you kind of look at?
Correct. And the biggest thing I find interesting is the moat question, right? And this is the horse has been beaten to death many times, and the image when you talk about moat comes to about this amazing castle, maybe in French Alps, the water around it, right? So enemy cannot capture. And so Buffett has mentioned this term quite a bit, and everybody tends to overuse it. And then everyone will talk about Apple's moat or Google's moat. But to me, moats come in different shapes and sizes. Like if you walk into a jungle and there's a lion, right? He probably has the strongest moat, but so does a porcupine, right? So does a fire ant. So we tend to feel that, oh, every fire ant or porcupine aspires to be a lion. That's not the case, right? So in business world also similarly, there are modes that are stronger and bigger, but there are modes that are stronger but they're smaller. You could have a musical shop that's very regional. You could have a trucking business very regional. But what happens is people who go to business school and learn these things only look for big companies, strong modes that you can identify. But what you need to see is flip on its head. Can you think in a different angle and look at the moat? Is it a smaller company, but does it have a stronger moat? Right? Is it a fire ant? Does it lie and attack a fire ant? No, it's not worth its time. So there are smaller companies with great business models that is not a shiny object that people go after, like Nvidia, and you can make a ton of money. And the example I give is if you have a moat, a castle and a moat, and the invading army comes to it, they'll try to take over the moat and take the castle. But if you have a horse barn just outside of the moat, not protected, with water wells and food and shelter for the horses, even the invading army does not destroy the horse barn. Does the horse barn have a moat? Yes. Can you see it? No. The moat is that it's needed for everybody. And the guy who runs that horse barn probably survives. Even the enemy likes him because they need to feed and shade their horses in sun and winter, right? So that's what I tend to think about. I think I want to be contrarian in terms of thinking and analyzing a business. And can I look at something in a different angle? See, US markets are very efficient. Incredible number of smart people working at it every day. If you don't have a different point of view and approach, you're not going to succeed in this market.
Right, right. Have you just curious too? Also, um, has your approach or analysis or even principles as you go about your investing, day to day process, has that process changed, or maybe some lessons that you've learned over time that you would tell your older self, hey, you should have done this or should have done that? I'm just curious.
No, I mean, we don't have enough time for that, Skylar, but and Mike, I'll tell a few things though. No, it's been a learning process, and I think I'm still learning, right? That's one thing I can promise is I will make mistakes and I will keep learning on those. Because if I don't make mistake, that means I'm not pushing myself and my approach. So earlier on, what I did was I read 50, 60, 70, hundreds of books, right? And all the letters and everything from Buffett. And then I had a view that everybody has of Buffett and trying to approach their value investing. And then you learn to peel the onion. What he's saying at one level, what he means at multiple levels is very, very different, right? He, he wants to teach you, but he doesn't give you everything on the platter either. So initially, I would try to find these boring businesses that are not good returns businesses, but that are cheap, and they're cheap for a reason. But eventually, I learned businesses that were stronger, right? How they were trading at a discount. And the analogy I'll give people is do what Buffett did in 50s and 60s, but with the knowledge he has now, right? And so that's a very counterfactual way of looking at it. What Buffett knows now, he will only buy big businesses. But if what he knows now, if you take it back to a smaller capital, how would you think about it? And so I've had companies that are too close to the borderline in terms of debt, interest servicing costs, sometimes not trustworthy management. In industries I thought I knew enough and I didn't. And so I've drawn certain lines. Like I did work at finance and credit cards and others at McKinsey, But then those are the businesses that are more prone to problems because you cannot see their balance sheets clearly. So I realized, okay, if I'm investing in a bank or a credit card business, I'm going to have a higher hurdle of me understanding, right? And so those are things you learn as you go along as well.
Talk to us about the famous Lollapalooza that Charlie Munger, mentioned, multiple times toward the end.
Correct. So Lollapalooza, I think I will credit the late Charlie Munger, a great hero for me at least, with the term. And what he means by Lollapalooza is, let's say, when things go good, the things go good, right? Um, NVIDIA built this GPUs for crypto. People loved it, and then they took this GPUs and something similar to build LLMs. And see, the good things, good things, good things. Right now, everybody wants them. Nobody can build them. They have this architecture, and when the positives stack up, they stack up. That's the Lollapalooza, right? So that's what Charlie Munger will talk about all the time. Look for businesses like Costco, Nvidia, Apple, where Lollapalooza stacks up. But now, can you think differently, right? And I believe Lollapalooza stacks up opposite way too. Now think about Under Armour. It's the Lollapalooza in reverse, right? The overordered inventory, the inventory they are selling at a higher cost, so net income shows negative even though cash flow is positive, right? Places like Costco and Dick's Sporting Goods no longer want a lot of your product because they are overburdened the inventory already. So it's a Lollapalooza in reverse. But is the business stable? Yes. So the way you turn that Lollapalooza on its head, the way Charlie Munger talks about is an opposite effect that can happen. Yes, it does. Can you be on a lookout for it and then profit from it? Another example I'll give you is HMHC, Houghton Mifflin Harcourt. That is one of the biggest textbook manufacturing companies in the US. Now it's private. Goldman Sachs recommended the company at $11. The great Abby Joseph Cohen did in 17 and 18, right? She was a former chief economist at Goldman Sachs. She mentioned it. I'm a big fan of her. I look at the company, $11 too expensive. It went to $1 and change during COVID because everybody believed nobody would read books, right? That's not true. We backed up the truck and made a ton of money on that. The company went private at $22 from 1 to 22, right? So Lollapalooza in reverse, and it can happen. But at that point, it gets scary. You might start buying at 2 and you go to 1. Or do you have the stomach to withstand it? And I think that's the hardest part of my approach. I buy something and it keeps going down, and you need to have the hardy stomach to continue buying it.
That's great. What is what's the name of your firm, Yellow Mountain Capital? What's the origin of that? Just
So I grew up in this state called Maharashtra. It's in Western India. Mumbai is the capital. And there are two local folklore about gods or saints, who are call it, coming down from heaven and converting a mountain into gold and using that gold to distribute it to poor, needy, and the people who are educating masses, kids and older people. So me and my wife were thinking of starting this business. We wanted that in our mind, right? So as we make more and more money, as we are more and more well off, we want to start giving back to society, right? We are already doing it in our own way, but if with God's grace more things come our way, we never want to forget what we are doing it for. And that's we wanted to keep the name itself that will make us grounded and always remind us why we are doing what we're doing. My story, Skylar and Mike, is not possible without people helping me. A lot of my friends' parents, they pay my fees. They buy me books. They buy me clothes. And my story is possible because the society has helped me. And I'm very grateful for the society for believing in me and giving me the resources needed to succeed. But what if there are more Vinayaks in this country and the worldwide? Can I help maybe 5, maybe 10, maybe thousands? If that's what I can do, I would really consider my life successful. And ultimately, that's the aim. We do it in a way, but I don't want to talk and brag about it. I mean, everybody should do their charity in their own way, and we do our own way too. So, hence the name. So, thank you for asking.
that's great. Oh yeah, I love that. That's great. I
Yeah, I love that.
love the
That's very humbling. I like that a lot. Do you have any advice that you would give to, an aspiring fund manager, somebody looking to launch a fund today?
Got it. I mean, the advice I will have for any fund manager or any kid or anyone, adult who wants to manage money or learn about investing, I would say follow the greats. Follow Warren Buffett, Seth Klarman, Howard Marks. We are lucky to live in a country where we have these people accessible. I mean, I ran into Howard Marks once, and he was very generous with advice. I had people like Leon Cooperman call me, and people believe all these billionaire people would not have time or advice to give you. They are wrong. But I would say if you can do your hard work and research, you can truly beat the markets. If I can do it, an immigrant who came to this country with almost nothing and has a third or fourth career in his life doing something totally random that he was not trained for, I think anybody can, right? The only thing one needs to do is not listen to what Wall Street trying to preach you. Don't do short-term trading. I think the only people that benefit are the trading houses. Do fundamental investing, and there's a lot of money to be made. Do the hard work.
That's great inspirational advice. I love that. So, so Vinayak, what are your thoughts on the history of the markets or what you learned from Ben Graham?
And so, whatever value investing or any framework we know, it's all thanks to Mr. Ben Graham. And what I have done personally is not only read his Intelligent Investor or Security Analysis. I found some of his lectures after World War II that he gave to GIs at the New York Finance Institute. They're hard to get, but you can, and harder to read. But those are the most phenomenal things you can read. And he talks about this example, and that has been written in my memory like anything, and that I want to share with your audience that I think they can take away with. So when World War II, US, when it started and it was likely that we would enter, Wright brothers, and Curtiss Wright was the aircraft manufacturing company, skyrocketed like anything. And I think United Distilleries, there's a distillery company out of New Jersey, was trading at very, very low prices. Now, everybody on Wall Street was recommending Curtiss Wright, and they were shorting this alcohol company, right? But if you had done the opposite, what would have been the effect? Now, when the World War II ended, Wright Curtiss was trading at much, much lower prices, and the distillery company was trading at very high prices, right? And this is what happens in the market every day. You can also read books like John Brooks and others that even Ben Graham has mentioned over time. Those are histories about our markets, right? People are trading stocks in the shade of a tree on Wall Street. How did we journey from there to 20s to 30s, 40s, 50s, 60s, 70s, the nifty 50s, and all of those crazes? I think anybody who wants to do serious investing should understand what has come before us and learn from their mistake rather than making on their own. I think Ben Graham is a big hero and a torchbearer for all of us to follow.
Yeah,
Awesome.
very cool. I love it. Awesome. Well, Vinayak, this has been a lot of fun. Really appreciate it. Love your stories. Where could people go to connect with you and learn more about your company?
The best way to find about us is reach out to me. Maybe we can have our email address in the comment section here, or you can also find us on the web, yellowmountaincap.com. I would love to hear your stories, get to know more about your audience as well.
That's great. Yeah, we appreciate your time, and we'll definitely include all your contact information in the show notes. This has been fantastic, Vinayak.